Today I'll pitch buying Kroger. As you can see from this slide, it's a long idea. In investing, there are two categories, long and short. Long is when you want to own a company because you believe their equity or stock price will go up. And shorting a stock is when you bet against it. For example, if we thought that Toys R Us was going bankrupt, we could have shorted that company a while back and made money. Anyway, I think Kroger is a long idea. So what is Kroger? Kroger owns supermarkets throughout the United States. You might know the Kroger brand, but they also own other brands such as Ralph's, Food for Less, City Markets, and the other examples that you see here. As I said, Kroger supermarkets are located all over the U.S. There are approximately 2,800 Kroger-owned grocery stores in 35 states. This map shows you where the stores are, and as you can see, they're clustered in the Midwest and along the East and West coasts.
Bless you.
So here are some of the Kroger financial statistics. The company will do about $115 billion in revenue in 2017, will have a gross profit of $25 billion, the EBITDA is approximately $6 billion, and earnings per share is about $2. So you all know that revenue is sales, but I'm sure that not everyone knows all the other terms, so let me give you a quick overview. Gross profit is the profit a company makes after sales-related expenses. So for Kroger, gross profit equals the revenue minus the cost of groceries minus cost to operate the stores like rent and labor. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. So if you take gross profit and subtract the corporate overhead, such as wages and salaries of the senior executives and headquarters, that's EBITDA. And EPS is simply the EBITDA minus depreciation, amortization, interest, and taxes, which is the net income. And then you divide that by the number of shares to get earning per shares, or EPS. Okay, so why buy Kroger now? I have four main reasons. First, the consumer economy is strengthening. Second, we're now officially in an inflationary environment, and inflation is great for the grocery business. And third, the current administration passed a new tax law which massively benefits Kroger. And finally, current valuation is at an all-time low relative to the market. I'll talk about these in detail. So I mentioned the consumer economy. Let's unpack that. Consumer confidence is at a 5-year high. This is a real measure that economists look at every month, and it means that the average consumer feels increasingly better about their financial position. Notice that in this graph, the red is consumer confidence and the white is Kroger stock price. Through the end of 2016, these two metrics were highly correlated. Here you can see what happened last year. Consumer confidence stayed high, but Kroger stock went down. Now, why did this happen? There were many reasons. First, there were concerns that the Trump presidency might upset the average consumer, but it didn't. Second, there were concerns over increased competition, but competition wasn't actually that bad. And finally, the cost for Kroger to buy merchandise to sell was going down, which was bad for business. But all of these fears are now behind us, so the spread between the white and red lines should close as Kroger stock moves up. So like this, I expect consumer confidence to continue to get stronger, and if that happens, so will Kroger's stock price. My next reason for investing in Kroger is the current inflation environment. During my research, I learned that supermarkets are one of the big beneficiaries of a modest inflationary environment. So let me explain why. Inflation is when the value of goods and services creep up a little bit, and this means that the same amount of dollars will buy less stuff each year. This picture shows that in 1998, $20 bought you a full cart of groceries, but 5 years ago, not so much. And as prices for goods rise, a supermarket can increase their prices to make greater gross profit. And remember, gross profits are revenues minus the cost of sales. This is a graph of the Food Producer Price Index. What this is the prices of all food and beverages that you buy at a supermarket, such as eggs, milk, bananas, protein like poultry, pork, and beef, as well as the stuff you find in the center of the store like Campbell's soup and cereals. As you can see, these costs were declining most of last year, but when the PPI declines, Kroger can't raise their prices on goods they sell to the consumer. But more recently, the PPI has started to rise. And this is very positive for Kroger because they can raise their prices and make more profits. And here's the proof. The red line is PPI and the white line is Kroger stock price. You can plainly see here that when the PPI increases or decreases, it's not long after that the Kroger stock price moves in the same direction. So as PPI is now increasing, so will Kroger's stock price. My next big reason for owning Kroger is because of the new corporate tax law that went into effect January 1st of this year. There are a lot of complexities in the new tax code, and I'll admit that I only learned a little bit of them, but here's what I do know. The corporate tax rate was 35% last year, and this year that rate is 21%. So right off the bat, Kroger will save 40% on their taxes. Also, there are rules for depreciating assets that further reduce the amount of taxable income. This analysis above took me a long time, but shows the effect on changing the tax rate and accelerating tax depreciation to the new 100% bonus method. We could talk about all the numbers on here, but let me just go over the high points. The first column shows earnings per share under last year's taxes. The second column just changes the tax rate from 35% to 21%. And the third column adds in the new laws for bonus depreciation, which makes taxes even lower. So the big takeaway is that earnings per share will go up from $1.95 to $2.75, up over 40% just from taxes. And finally, the stock is cheap. The white line shows the PE ratio of the whole stock market over the last 10 years. The red line shows the PE multiple of Kroger over the last 10 years. The gap between the two is the difference in valuation between the market and Kroger. And as you can see, the gap is the widest it's ever been. But because of all the reasons I discussed, that gap will close and Kroger stock will rise. So this is my summary. Kroger is a buy because the consumer economy is strengthening, and we're in an inflationary environment. There's also a new tax law that makes Kroger more profitable than ever, and last, it's very inexpensive. Thank you, and I hope this idea was good food for thought.